What is up, you guys? Nick here, and in today's video we are going to be going long. I see so many people on the internet screaming at their screens to buy NIO shares based on extreme short-term movements and short-term prospects. But when investing in a company, it's absolutely crucial you are aware of the long-term trajectories, plans, and future financing to better understand where a share price will land in 3 to 5 years' time at least. I've told my subscribers time and time again that the most optimal, secure, and most appropriate way to invest is strictly long term. Remember, we're investing, not gambling. And I think unfortunately more and more people these days are getting the two a bit confused. There is inherent risk associated with every single equity purchase. However, we can greatly reduce these risks by having a vast understanding of the company's long-term projections to then more accurately be apt to formulate a calculated decision of whether to allot capital to said company or move it elsewhere. So that being said, I want to dedicate this video to NIO's business moves heading into Q4 and throughout 2021. Make sure to watch till the end of the video. I'm going to be covering a lot of information, and it's important for you to understand the ins and outs to decide whether NIO deserves your capital. Before we start, hit that subscribe button. I would really appreciate it. I do a ton of videos like this covering EV, tech, and disruptor companies poised to dominate the future landscape. I have and will be keeping a very close eye on NIO as we head into earnings day and beyond. You don't want to miss any of those updates. Smash that like button. I'd really appreciate it. Drop a comment, do whatever you gotta do. Anyways, without further ado, let's get right into it. The Chinese electric vehicle company NIO, based out of Hefei province, China, has been unstoppable as of late. Their shares are trading up 1,222% over the course of the past 6 months, and we are currently sitting at 44.56. Investors are predicting a massive Q3 earnings report to be released on November 17th, with very likely increased vehicle margins, increased gross margins, increased revenue, and a continual increase on delivery figures. Quite intense profit taking occurred on Friday, as I had predicted and warned in one of my latest videos, after a massive run. However, shares maintained a 6.99% jump over the past 5 trading periods. Don't be frightened by these short-term corrections. These are and will continue to be quite predictable, as with any surge you are likely to see profit taking and a pullback. These just represent buying windows to scoop up additional shares. So we all may be aware that NIO recently released their newest vehicle, their so-called SUV coupe, the EC6, starting at about $52,000 USD and beginning deliveries on September 25th just this year. Market reaction has been overall very positive. NIO sold 16 of these puppies in the last few days of September and 883 in October, and considering Golden Week in China likely deleteriously impacted deliveries throughout the month, to see the 7.37% increase in total deliveries was actually quite impressive. The reason I am highlighting this growth in sales in the EC6 is that analysts are seeing a trend in central China to a smaller vehicle, and the EC6 happens to be NIO's smallest vehicle. The reason that this trend is important to both NIO and its investors is that NIO is planning the unveiling of its first marketed sedan for early 2021. I believe every single company based in the automotive sector needs to widen its market share by including a sedan to its roster, and I think this will do massive things for NIO, their delivery capacity, and ultimately their bottom line. The sedan will be unveiled at the 4th annual NIO Day, a massive showcasing of the accomplishments the company has made throughout the course of the year to set sights on the future and to, of course, unveil their newest products. NIO Day is set for January 9th, 2021 to take place in Chengdu, China, and could mark the unveiling of NIO's newest vehicle, likely coined the EE7. NIO's absolutely gorgeous, sleek, and may I say, perfect newest electric sedan flagship production model. This vehicle is seemingly quite different than their concept sedan vehicle, the ET7, which many were expecting to come to fruition in this NIO Day. Li Bin, NIO CEO and founder, confirmed big ET guy. There is a lot of speculation in the rumor mill about which of these cars will be unveiled, if the ET7 has just metamorphosized into the EE7, or if the EE7 is a sport version. But moral of the story is that NIO is very likely to release their all-new sedan model. The ET7 preview concept was first unveiled at the 2019 Shanghai Auto Show, and again at NIO's Q2 2020 management meeting. NIO released a teaser on their mobile app of this front panel view of the EE7 and is set to begin mass production at NIO's JAC plant in Q4 2021 and begin deliveries early 2022. This sedan is poised to become NIO's flagship sedan model on their roster, and management are expecting it to deliver around 35,000 vehicles in its first year on the market. market. This new sedan will be NIO's first direct competitor against Tesla's Model S and is being launched to try to steal some of their near monopoly on the electric vehicle sedan industry in mainland China away. We can see how well Tesla's Model 3 has continually performed in China, and it's clear that consumers are preferring smaller models over the previously anticipated movement to SUVs. It is for this reason that I really do believe NIO's sedan will completely change their business model moving forward. Shareholders can expect a likely surge leading into NIO Day, as in 2019, NIO's last NIO Day, shares rose around 54% on December 31st. However, it is worth noting that these shares did indeed plummet yet again a few months later due to growing concerns with the viability of the company at the time it was intersecting with the global health situation. The company will also likely release new specs on their batteries and potentially refurbished older models. However, this is speculation, but I will release new information as soon as I hear about it leading into this massive day. Another big anticipation for this newest sedan is that news has leaked out that this vehicle will likely be fitted with L4 autonomous driving technology. L4, or Mind Off Tech, is the level of autonomous driving where absolutely no driver attention is required to operate the vehicle. The user could essentially be asleep at the wheel or reading a book, watching a movie, or trading NIO shares. NIO awarded a contract for approximately $660 million last month for a NIO 5G V2X vehicle-to-vehicle communication technology platform, providing 360-degree non-line of sight awareness and higher-level autonomous driving and prediction software. Autonomous driving is poised to rapidly expand in central China in the coming few years, and I am so excited that NIO has clearly made a massive research and development commitment and early investment into this tech and is fitting it into their upcoming vehicles. I think this is yet another advantage NIO will have over some of its competitors and is another factor that is setting NIO apart from others. Analysts are predicting NIO's high-end share price over the next 12 months could reach $310.32 with a median price of $155.80 and a low of $44.12. This is obviously a massive delta, showing both the bulls and bears all in one picture. The median estimate would represent a whopping 250.12% increase, so if you haven't yet invested in this company or want to continue investing in this company, there is clearly still a ton of room for potential growth. Analysts are predicting an exponential increase in sales with a Q4 2020 of 5.3 billion renminbi, with a 2021 sales range of 22.1 to 33.9 billion renminbi, with a consensus of 26.8 billion renminbi. This would represent about a $4.0 billion USD for 2021. Earnings for Q4 are pinned currently at negative 0.15 cents a share, showing a rise in the right direction, and a 2020 full-year EPS loss of 73 cents. Moving into 2021, they are predicting a negative 49 cents per share loss for the entire calendar year. Analysts are projecting a growth of 32.90% over the course of 2021. So what is this telling us is that analysts are clearly still very bullish as a whole on NIO's current status, and regardless if one short seller who stands to potentially benefit from a falling share price tries to throw a wrench in the operation, it's important to keep your mind and investment strategy long term. If you worry too much about short-term fluctuations, you are essentially paying attention to meaningless noise. So as always, remember to focus on long-term prospects. NIO also has rumored plans to open up another JAC NIO partnership plant next year to increase their ability to manufacture a continually increasing quantity of vehicles. Li Bin has stated that supply strain issues are still a factor, however, mitigation processes have been taking control of the issue since the summer months, and much of the supply strain has been completely mitigated. NIO also plans for European expansion in the latter half of 2021 and have been on a hiring frenzy of personnel in countries such as Germany. In the quest to becoming profitable, Europe and North America are absolutely essential pieces to this puzzle, and it's a near necessity for young electric vehicle companies to expand as quickly as possible to gain a foothold in the market. Li Bin has gone on record stating that NIO plans on being in the quote, most important global markets by 2023 or 2024 in an accelerated plan for global expansion. The EV industry is extremely fierce currently, and the only way to establish oneself is to expand at this rapid pace, and I would be extremely happy to hear more about this in the coming quarters. This expansion would indeed be a very difficult and expensive process, as NIO would have to commit millions of dollars upfront to building its infrastructure before full product rollout. So it's important to realize that it's not going to be an easy and straightforward expansion process, but it is indeed necessary. As NIO's Chinese infrastructure is already firmly rooted with 143 stations in 64 cities, these swapping stations can act as a continual and increasing percentage source of revenue for NIO in the coming quarters, which should help their bottom line in their attempts to rapidly expand. The outlook for NIO's 2021 prospects is very exciting and a lot is happening. This company is making so many moves on a continual basis, it feels like a full-time job keeping up with them. Anyways, I will keep you all continually updated on their moves leading into Q3 earnings and beyond, so make sure to hit that subscribe button, smash the like button for the YouTube algorithm. Thanks for watching, everyone. Thanks for the continued support. I really do appreciate it. Anyways, see you all in the next video. Cheers.